This past Monday, November 11th, marked Bitcoin's largest one-day price move in history. It surged, as you can see on the chart right here, $8,086 in a single day, breaking the previous record set just days earlier when it rose $6,776. So what's driving this explosive momentum? Well, we know there's a whole variety of factors behind this, right? We have a pro-Bitcoin president-elect in Donald J. Trump. We also have a majority pro-Bitcoin Congress in both the House and the Senate. And the prospect of a U.S. strategic Bitcoin reserve is looming, which reportedly is driving many sovereign nations to accumulate Bitcoin and try to front-run the United States. But if you add these factors to a mix of the surge in retail interest plus record-setting ETF inflows into the spot Bitcoin ETFs, you don't even have to factor in the supportive macro backdrop to understand what drove this completely explosive one-day candle. And if you take a look here, you could also see that Bitcoin's current price action lines up very closely with its historical 4-year cycle. So far, Bitcoin's percentage returns at this day relative to the prior cycle low uncannily mirrors its prior two cycles. You could see the 2015 and 2018 cycle and the 2018 to 2022 cycle. At this point in the cycle, Bitcoin is now up 540% from its cycle bottom compared to 561% in the prior cycle and 525% the cycle prior to that. So if history continues to rhyme, Bitcoin's going to see much more explosive upside well into 2025 as momentum continues to build, adoption, institutional and nation-state inflows accelerate, and financial conditions continue to ease as rates come down, credit spreads narrow, consumers feel relief, and a recession is averted for the time being. So these cycles all have a very consistent rhythm, right? You have accumulation, a bull run, generally a blow off top, and then a bear market. And after 7 months of accumulation and consolidation since March, Bitcoin has clearly and decisively entered this bull run phase. So if you'll take a look at this second chart as well that I have for you, Bitcoin has risen 38% over the past month, breaking out of this long-held range that I just spoke about at about $66,000 to reach $91,000 and climbing as I'm talking to you. I have to get this video out very soon, otherwise we may be at 93 or 94. For 7 months, Bitcoin ranged plus or minus 25%. Relatively speaking, you could see that in each of these three areas I've marked here, plus or minus 25%, right? That's where Bitcoin ranged, only to explode out of that to the upside by 39%. So it broke that range here. Decisively, it retested it once, and then we immediately broke up to the upside. Now, technical analysis only goes so far, but the reality is the size of the range is roughly equivalent to the size of the breakout, and we have completely exceeded the size of the range in the breakout that we actually got. It soared as high, again, as 40% in a matter of days. This is classic price discovery behavior. Okay, so price discovery is when there are no historical sell levels to anchor market participants. We are in uncharted territory. Bitcoin's prices is higher than it's ever been before, and as a function of that, there are no areas psychologically or technically to sell. And so price tends to move very rapidly to the upside during these periods of price discovery. That's exactly what we're witnessing now. And now Bitcoin is consolidating at $91,000. I will repeat that. Bitcoin is consolidating at $91,000. It spent 4 days here. And so this is not a blow off top, at least just yet. This seems like a cooling off period that will precede another leg higher. And speaking of ETFs, if we take a look over here at the spot Bitcoin ETF inflows, you could see that this week has just been totally monumental. We've seen $4.156 billion in net inflows, not factoring in yesterday, and $100 billion in total assets, which equates to about 1.01 million Bitcoin. And we're closing in on Satoshi's estimated holdings of 1.1 million BTC. And so this ETF-driven demand is a game changer. You have to remember that these ETFs were not around last cycle. This is a structural buy-side force that just did not exist in previous cycles. Now, of course, when the bear market comes, it will be reflexive downside as well. But for now, they are structural net buyers, providing consistent and massive buying pressure that just wasn't around last cycle. And if you take a look here at BlackRock's IBIT ETF, it has been the most successful ETF launch in history, only 211 days to reach $40 billion in assets under management, making it the single best ETF launch in history. And it's not particularly close. You could see VOO, IEMG, and IEFA, and all of those took well over 1,200 days to reach $40 billion in assets under management. IBIT only took 211 days. So clearly, there's this structural demand that's been pent up for quite some time for Bitcoin from these traditional market participants. So Bitcoin's growth at this point is now being measured against the world's largest assets. At $1.78 trillion, it has now taken over silver and the Vanguard Total Stock Market ETF to claim the title of the world's 8th largest asset. And as I'm speaking to you now, it is fighting with Saudi Aramco. It's neck and neck with Saudi Aramco, the world's largest energy company. And it's gunning for Google's spot at $2.1 trillion after that. Let's get a little bit more perspective here as to where we are. Year to date, Bitcoin has risen 105%, which has totally crushed gold's 24% gain. Over the past 30 days, the divergence has become even starker, with Bitcoin up 35%, while gold is down 3.74%. Actually, as I'm talking to you, Bitcoin is up 110% year to date, while gold is down 24.5%, right? So it's extremely stark. And while some argue that Bitcoin is overtaking gold as the preferred store of value, I would hesitate to say that. 2 weeks of price action is not enough to establish a pattern of this scale. Rather, this trend of Bitcoin absorbing the lion's share of gold monetary premium is a decades-long process that we're only 15 years into. This recent trend, i.e. this divergence over the last 3-4 weeks of gold falling as Bitcoin blasts through new all-time highs, likely relates to the downturn in global M2 money supply, which is something that gold tracks in real time, but Bitcoin tracks with a 10-week delay. I'll show you this chart right here. This is gold. This is Bitcoin with a 10-week delay juxtaposed with the global M2 money stock, and the global M2 money stock is something that gold tracks in real time, but Bitcoin tracks with a 10-week delay. So gold has already corrected in line with this trend, and Bitcoin could very well follow suit. And if it does, you could see here, we might see a pullback to the mid $70,000 range, something like that, before resuming its upward territory. Now, the question is, can retail demand, institutional allocation, and nation-state accumulation buck this potential correction? That remains to be seen. But the long-term trajectory of Bitcoin's monetization has become increasingly clear. It's gunning for gold. That's the reality of the situation. And at gold's current market cap of $17.2 trillion, this implies a roughly 10x increase for Bitcoin from here, which equates to a price of roughly $895,000 per Bitcoin. Though as Bitcoin approaches and surpasses parity with gold, ultimately, gold's market cap will likely trend higher as well. And so if this happens, which it's likely to, Bitcoin is likely to reach parity with gold at or above $1 million per BTC. And this isn't bullish hyperbole, it's simple mathematics. Bitcoin serves gold's function better than gold itself. While gold is relatively scarce, Bitcoin is absolutely scarce. There's always more gold to be mined. Bitcoin's supply schedule is fixed. And if you add to that Bitcoin's verifiability, its immutable transactions, and this unchanging supply schedule, and unparalleled portability, it's only a matter of time before Bitcoin usurps gold as the world's largest asset. It's just a question of when. So at the end of the day, and this is the parting thought that I'll give you, people call this thing a bubble, but a bubble with a 15-year track record of rising from the ashes cycle after cycle is not a bubble at all, right? The Bitcoin bubble now only exists in the minds of those who have been awaiting its downfall, only to have their prayers unanswered for 5 cycles and counting. You can ignore Bitcoin at your own peril. That's what I'll tell you. So thank you so much for watching this video. I really appreciate it. If you liked, make sure you share this and follow me for more, as well as checking out Theia at theia.us. It is the world's simplest Bitcoin self-custody solution. If you're on the fence about taking your Bitcoin off of exchanges, now's the time. As Bitcoin rises in value, these exchanges want to get their hands on your coins more than ever. And as this risk rises, you need to start taking custody of your Bitcoin seriously, and Theia is the easiest way to do it. Visit theia.us to learn more, or app.theia.us to check out our web app. That's all for today. Thank you so much for watching. I'll talk to you later.